Welcome to the Anchor Your Retirement podcast, not podcast. I am your host, Barbara Gullen, hanging out with a hatless Tony Shore.
It'll be me wearing the KC Royals hat soon because I lost the bet. The Twins
You
lost to the
will.
Royals. I think it's great you're wearing the hat. The
I'm
last
going to
minute.
shop for a different one for you.
Yes, please.
Oh, come on.
Please.
What's wrong with the blue leopard print?
I love it on you, but for me, no.
We could go with sparkles.
Solid colors, please. Solid colors, please.
Okay, I will be kind.
Yeah.
I will be kind.
Well, I lost the bet, so
Yeah. And for those of you that want to see the hat, go check us out on the YouTube channel.
Yes. Yeah. If you're listening to this on one of the podcast streaming services, Spotify, Apple, Amazon, check out the YouTube video and you can see it is a really cool KC hat. Probably one of the coolest I've seen. Not for me, but Barb's wearing her Royals hat, big fan, and they've done quite well.
They have, but I hope we do better against Detroit tonight. While I was listening, they were winning, and then I stopped listening and they lost.
Could be worse. You could be the Twins. We can't win a game right now. I mean, we haven't won a game in a while. So
we've lost 2 in a row now. We won the series with Pittsburgh and dropped our game on Sunday, and then we lost 7-6 last night.
Ooh, that was a close one.
It was. And when I was listening, we were up 4-1. So I was like, okay, I'm going to go to bed. I really didn't go to bed quite that early. I had a few calls to return and just never got back to the game. But this is also the first day of meetings for the Federal Reserve.
The Fed is meeting to what we hope is lower interest rates, I guess, right?
Yeah, we'll find out tomorrow whether or not they lower interest rates. And really, this time around, it's not a question of if, but how much.
Right.
They're going to reduce it by 25 basis points, which is 0.25%, or 50 basis points, which is 0.5%. And, you know, it is one of those things where they're going to get criticized, whether they do, whether they don't.
Right.
It is unusual for the Fed to do anything with interest rates this close to an election.
Yeah.
Some people would say it's kind of taboo and not something they should be doing. Maybe they should have done it in July.
Yeah, that's what everybody says. They were supposed to have made 5. You know, everybody thought they were going to lower it at least 4 or 5 times by now this year.
Well, yeah, everybody said that except the Fed.
Yeah, yeah, that was speculation and wishful thinking on a lot of people's parts. To
the best of my knowledge, Chairman Powell never said that they were going to do that many rate cuts this year. He talked about rate cuts over the next couple of years.
Yeah.
And, you know, for those of you that have variable interest rate loans like credit cards, or if you've got an adjustable rate mortgage on your house, your payments get to go down a little bit. Not by much, but anything's better than nothing.
Right.
For those of you that have been enjoying the higher interest rates on savings accounts, those are going to go down a little bit too.
Yeah, like CDs at the bank or MYGAs. Yeah, multi-year guaranteed annuities had some really, they really were offering some great deals, you know, like a couple of years, lock in at 5% and above 7%. That's pretty good guaranteed interest.
And that is going to go away quickly if it hasn't already gone away.
It's starting to, you know, they've started to lower the rates and shorten the amounts, like the specials. I was in my dad's bank helping him just a few days ago. And I noticed their sign, they always have a sign up, here's our CD special at the bank. And now it's a 7-month CD, you know, you can lock in at 4.5% for 7 months. I'm like, That's not very helpful. A
Yes.
7-month period, because it's probably going to be lower in 7 months. So,
All right. So pop quiz, Tony, and I'm putting you on the spot so we can educate our readers.
mhm.
Or listeners? Nobody reads this podcast.
Our readers.
Too many carbs at lunch, Barb. Too many carbs.
We're
at
not
lunch.
writing for a newspaper here.
Do you know what the federal funds rate is?
The federal funds rate?
Right, because that's the interest rate that we're talking about.
Oh, I don't know. Isn't it like 5-6%? 7?
I wasn't asking what the percentage is. Do you
Oh,
know
what
what
is
that rate is? That is the rate that the federal government uses to loan money to banks.
Yes. Yeah, I knew that.
And well, I just wanted to make sure our listeners had a chance to catch up on that if
Yes.
they weren't
Yep.
astute with that. And that is the benchmark and affects the interest rates for everything else.
Yes.
So as it comes down, our borrowing cost comes down. You are probably going to see a flurry of activity coming up about interest rates for houses and for mortgages dropping.
Yeah.
Here in the not too distant future.
Hopefully.
Right.
Right.
And like I said, when we were talking before the show, there's going to be tomorrow when Chairman Powell makes the announcement and says we are advocating for a rate cut of whatever that ends up being. There is going to be a flurry of trading activity in the market that's going to happen really quick. It could skyrocket, then tank. It could tank, then skyrocket. But I think you're going to see volatility in the market tomorrow, regardless of what happens. And even though you're going to hear this podcast after the fact, when that happens, it's important to take your emotions out of the equation and understand that this just happens every time. Yep. And that your best course of action is to stay the course, not to try to time the market, not to try to, anticipate what's going to happen, because everybody's got their opinion. Even Chairman Powell can't predict what the market is going to do.
Right. Oh, no. Yeah. Nobody has a crystal ball.
No, nobody does. And it's like we were talking about before, if you've ever watched currency trading. And for those of you listening to the podcast, no, I do not advocate currency trading. It is extremely volatile. Yeah. It's even more volatile than options trading. But if you've ever watched the currency trading charts, like when inflation numbers come out or unemployment numbers come out, it looks like an EKG having a heart attack. It's just all over the place.
Right.
And
very volatile.
And there's a good chance we're going to see that volatility tomorrow, especially in the minutes immediately after that announcement is made. So
what should we do? What does that mean for our listeners and viewers out there, Barb? Should they try to time the market and make moves?
Oh, good heavens, no.
Should they not panic, not worry about it? We know there's going to be volatility. Ride it out.
Yes, and we know that September is a particularly volatile month in the market. It statistically, I think, is the only month of the year that trends down more often than it trends up.
Yeah. And so the interest rates and what the Fed does, coupled with the coming election, when that happens, it sounds like we can expect some volatility between here and the end of the year, probably, right?
Oh, easily. Yeah. Easily. Especially if people keep trying to take random shots at one of our candidates.
Oh,
like appears to be the thing going on. And
yeah, terrible.
Regardless of who you do or don't want in office, we don't want violence.
No. No, that's terrible. I couldn't believe that. They gotta fix that. And I know they're really looking closely at how the Secret Service works. And there's a huge investigation going on, and they're scrambling to figure out what to do to make sure this never happens.
Agreed. There always is some sort of investigation going on.
That's true. Yeah.
it might make sense to just table the golf habit for a little bit until we get all of this stuff settled. But that's my 2 cents. And
Yeah, it must be hard to secure a golf course when you're out
you
in the open on a fairway like that, or the driving,
you can't. I mean,
area.
unless they're going to put them in a bulletproof suit, which I'm guessing, number one, doesn't really exist. Number two would really impact your golf swing. Just to be a little
Yeah,
lighthearted about this. There really is no way to secure that large of an open space.
yeah.
So,
Tough.
but rabbit trailing and getting back to what we're talking about.
Sure.
When it comes to interest rates, if you have been thinking, if you got a mortgage when we were at the peak of interest rates, if you're asking if it's time to refinance, probably not yet, because I think there's going to be more rate cuts.
Yeah.
I think that they're getting closer to that 2% inflation rate that they want. I don't know that they're going to ever perfectly get there. And as much as Chairman Powell has tried to architect a soft landing, it doesn't mean there aren't going to be bumps.
Oh, for sure. Yeah. I mean, we've seen that with inflation, the price of certain goods, with the cost of, with the interest rates on things like loans and credit cards, with the economy. But there are good indicators out there. And I think they've done an okay job. I mean, I think the conventional wisdom says what I hear on all the, the talking heads out there all say, people like yourself, Barb, the financial experts, are saying probably should have lowered them, incrementally, a number of times starting earlier in the year, and not waited until now. But
then they wouldn't all have to go back and say, yeah, we thought this, but it didn't happen. So there's some self-serving in some of those pieces that are talking. I do think the important thing to take away from this is that if you're still working, when there's pullbacks and corrections in the market, you are buying stock on sale and you are investing in your 401k on sale. So, if you're asking me if you need to go in and rebalance, first of all, I can't give you that advice without knowing a little bit more about you. Secondly, there's the old term for that is dollar cost averaging.
Yep. Dollar cost averaging into the market.
You're buying some rates higher, some rates lower. And, you do the best you can with what you've got. Overall, over time, the market trends up. While I can't guarantee it's going to keep doing that forever, I think that in this circumstance, trying to time the market, or trying to time future rate changes or election outcomes, you will just do little more than drive yourself nuts trying to stay on top of all of it. You need to turn your microphone back on.
Right. Yeah. You know why I muted it? Because
I heard the cat in the background.
Somebody's crying for attention. I'm at the home studio today, viewers and listeners. And Lacey, or Lacey Luhu, as we call her, she once in a while she just gets vocal and starts crying because nobody's paying attention to her.
Yeah, and one of my marketers at Gradient had a very vocal cat that I would hear in the background. That cat has since crossed the Rainbow Bridge, but I would always
hopefully just of its own accord and natural.
Of its own accord, yes.
Not because it was interrupting a video call.
No, lived a long, healthy life, I
apologize. I just.
Listen, I would rather, that's the stuff that goes viral. That's the cute stuff,
the cat crying in the background.
Well, remember when we first had COVID and the video that went viral of the man trying to have a business meeting by Zoom, the kid came in, and then mom
toddler
was crawling in on all fours to grab the kid. Here we are.
And he comes in the little wheelie thing, his little round thing, and he's looking around.
Yes.
That was one of the greatest moments in video conference history, right?
And those are the little moments of joy that we need to appreciate.
Yes.
in
Yes,
life.
they are.
So
They are. But interest rates affect all of us, and
they do.
and the pro side is if interest rates are high, you can earn more money on, fixed rate things like
Mhm,
CDs and
mhm.
annuities and other things. The negative is, if you're buying a house or you have any credit card payments you're
Or
making,
you're buying a car, yeah.
yeah,
All
any
those.
loans you have, or if you, God forbid, had an ARM, adjustable rate mortgage, those are
Yes,
terrible
yes.
when the interest rates go up. So,
Mhm,
but it's tied in with inflation, and inflation has come way down, which is good.
mhm.
Unfortunately, some groceries, which aren't calculated into the government's inflation
Yeah,
numbers, have
those
still
are still up
kept
there.
skyrocketing.
Those are still up there, yep. So, even though overall inflation might be slowing down, it does not mean that your cost of living is decreasing, or in some cases that it's even leveling out. Like you said, with food costs continuing to go up, foregoing eating is a very difficult way to balance your budget.
No, food, clothing, and energy are things that really affect people. And food and energy aren't included in the consumer price
They
index
are not.
inflation rates, right?
They are not. So, you're
I've never
always
figured
living
that
as
out.
neither have I, because unless you have like a bow and arrow and you're living in the backwoods and don't have an internet signal and therefore wouldn't get to hear this podcast,
Yeah.
um, it's affecting everybody.
Yeah. Yeah, that affects the most people. So, Barb, the answer is don't panic. But I think, if you're worried about what the markets are going to do because of the Fed making announcements or the
Mhm.
upcoming election, you should have a plan in place and a strategy. You shouldn't react. You should be proactive. And the way to do that is to work with a financial services professional, a trusted financial professional, a fiduciary who's going to look out for your best interests. And like I always say, I happen to know someone. I'm not going to name names, Barb Gullen, but I happen to know just the person for you. And Barb, this is what you do. This is what
It
you help
is.
your clients with. So I would encourage our listeners and viewers out there to give you a call, right?
Yep, they can reach us at area code 913-553-6222, or if you're online, go to our website anchoryourretirement.com, and it will take you to our contact page where you can fill out that form and a member of our team will reach out to you. You'll get to visit with either myself or one of the other qualified fiduciaries that we have on our team.
Excellent. Well, and this is an important topic. Interest rates do matter and they
Mhm,
really can affect your finances.
mhm.
So don't panic, though, is the message I got
Right.
today. Work with a financial professional, get a plan in place, or at least get a second opinion on where you're at with your personal situation because
Mhm.
everyone's different. And we all know now for sure that Barb is a Royals fan, the
She
Kansas City
is.
Royals. Love the hat, the leopard print hat today. That was awesome. Again, give your phone number and contact information before we go.
It's area code 913-553-6222, or just go to our website, anchoryourretirement.com, and I would say keep calm and keep investing.
All right. Great advice. Thank you so much, Barb. And listeners, thanks for tuning in. That does it for today's episode of Anchor Your Retirement with our host, Barb Gullen.
We'll see you soon.